Hey everybody, this is a special video. It's going to be part market radar. It's going to be part talking about the markets and education and a little promotion, I guess. Right now, again, I usually put these videos out on Friday evening after the market, well, during the market day. I am off the mic. RPM is on the mic doing a great job. Here you're going to get a good picture coming into a little after 2 o'clock, 2:15, what the market has done. Now, we've been discussing in our chat room here some of the levels here, and one of the two great indicators today. We had actually a lane divergence bottom set up here with a triple thread set up, and then we had a lane divergence topping set up here and a nice pullback with a little flag set up and then a follow through. But the truth is that divergence here worked out nice. We talk about these short-term 1-minute charts, so everything based on the 1 minute really is based on some of these setups. So once you get oversold like that on the 5 minute or whatever, then you have the divergence to the upside and you get that nice move up and it gets overbought. So you have to remember the time frame represents your entry and your exit strategy. So it's not, you don't want to go beyond balance there unless you're looking at multiple time frames at the same time, which we like to do. We talk about that 5 minute time frame lining up with the 1 minute time frame, and then you're good to go. So the market here has been unbelievable. Sort of say very kind to the setups here. I mean, it's just the last this whole past week we've been broadcasting live, and it was talking about the different setups. We, map out the setups and we talk about them constantly, but they've really come into play. We talked about, flag setups and identifying these real time on the show is, I pride myself on that. I want to be able to really point out the best areas in the market. And we come to a point where sometimes we take those trades, sometimes we don't. And it is, it's a different game when you have a position on and when you don't have a position on. The fact is, what I want to do is bring to you that non-emotional side of trading, where we could actually, take everything that the market has given us, understand that we have multiple levels lining up here, and this is a good level to look for a response back up. And at that point, talk about your exit scenarios and stuff, and how the 5 minute overall is, instead of being, influenced by a trade on the table. Because look at that nice trend line, So these levels here all play out. They're high probability zones. For 20 years I've been traded, and it's really over the last 10 years that I've gotten rid of all the crap that's just out there and crap, and then you start to weed out really things that start to work for you over and over and over again. It's the same thing. And again, probably the best analogy is going to a casino. But you're going to go to a casino and you're getting into that gambling bug. You're buying those books, and those books, what they're going to tell you, there's a right way of doing things and there's a wrong way of doing things. And the right way is based on odds and probabilities, how many cards in the deck, and being able to count and being able to know your probabilities. So that's exactly what we're doing here. There is a method, there is a method. It helps, for whatever reason, it gives you a little better historical odds, if you see something that happens over and over again. And it might not be many things. I'm not talking about the standard head and shoulders pattern. I'm talking about things that we really break down to, almost to the minute moves. And, and we could count them on our hands, basically, or maybe on two hands, But that's what we have. So we have a defined group of setups that we're waiting to play out. We know that those are high probability zones. The big test is to stay out of the markets in between those. Or taking the gamble trade, saying, oh, I need to be in the trade. Let me take a shot here. I see it's starting to turn. It might work, it might not work. But what we're talking about is the higher probability setups. You could get a lower probability and make it work out. And everyone is up to that's what it is. I'm not going to control everyone, and I'm not going to control myself half the time. If I feel there's a bullish, push here, and there might be a signal, we might take that opposite signal. That's those things come along, and that's, you can't say anything other than you have to have a good reason behind it, maybe a little market experience that makes you go against a call like that might be showing up as an indicator. But the fact is, it's not about that random, setup where we think that we might be breaking out or something like that. It's about understanding the everyday trade. Let's start off here and learn the basics. The basics of where pivots work and why pivots work and how channels work, how everything else works. Let's just start off with the basics. Just like in baseball, if you make contact, you're halfway there. And we want to be in that contact zone. If it's here, We understand the divergence there. We understand why things are working out. And that's a great thing to have. So we're going to go back here and just kind of identify some of those zones for you, kind of give you a walkthrough of the markets right now. Well, that's the best place to start is going out to last Monday here, and you can see how Monday started off. We're not going to look at the bigger picture yet. We're just going to look at individual intraday trade and seeing that first move up here. I think we mentioned a reversal candle, which we'd call a triple threat, and that's right after the open. And we always say that after the open, right before the close, is more volatile and things can play out. So not even sure that's a really good signal, even though it did play out a little flag here. But this is the more important signal here. And when we start to see, and again, it's important to let this market kind of get into its rhythm. You don't want to have a very choppy open and stuff. But in this case, you're starting to see the slow stochastic embedded to the upside and the medium stochastic kind of embedded to the upside. But you're seeing that, you're seeing this fast rotation back down here. So one of our setups is called it's a triple stochastic flag setup, and it's an excellent example of a continuation pattern. I've measured this out. I've traded this pattern. I've done so much study on it that I'm now very comfortable to call it one of the few HPS tradable scalp setups, and that's very easy to identify, and identify it by that fast rotation, the price holding on or around the 20 period moving average. It's important to get that rotation back in this holding around the 20. I don't want really down by the 50, even though the 50 does work a lot. In this case, we had a dual stochastic setup with the 50, but a little bit moved down here. But we're really concentrating on this very strong trend where we see these two embedded up around 70, above 80 is preferably, but really 70 is a kind of a line in the sand for me. And you want to just see that reaction, that push up here, that fast rotation back, and then that's that flag. And again, with every 1 minute chart, requires a 1 minute strategy exit. So you can actually look at it as a fast rotation up here. You maybe got in 92, 93, maybe you get out 94, 95. That's what you're looking for. Not to over trade the market. Again, you're still within that first hour. You did see a little oversold, multiple oversold levels, and a reversal candle. That candle closed, pushed a little higher, closed on the lows, and we had that follow through. So then you had that follow through, another HPS setup. We marked it off. And then a breakdown. Then it got really choppy, and we didn't really see any good setups here. You can see the medium stochastics have been holding up. The slow stochastics are chopping around. We did get a follow-through, and we had another nice little flag setup here. So we had a flag setup. You can see the strength in the lower and medium stochastics with the rotation back down. We look for that pop out. It kind of popped out. I mean, again, this was kind of a slower move. It slowly grinded higher, and it moved higher and higher and higher until we popped out of here. I mean, it's a nice move. Again, you have to be realistic in your time frame. You have to understand what you're looking for, and you can see the strength here. And I mean, you could have actually conceivably ran with this and just put a trailing stop underneath it and gotten a few points off of it. These are high probability zones. Each one is marked off real time. So you see the reaction on it, even though the overall strength is up, and probably you could say, oh, I could just go long at 9:30 and just hold on the rest of the day and get all these points. Well, that's not how it works. That's not how the human mind works. We don't even know. I mean, if you're set and your system is telling you, hey, we're going to move right up to 97, go for it, This is more the short-term, trail map of the markets. Why it moved up here and why it pulled back a little. And if you want to time that and gain another take another trade there and try to make the most money out of the motion in the ocean versus, trying to take one big position and coming back and checking on it in a couple of days. Different strategy here. Well, at the end of the day, we come back here, across and back down. We had a triple setup here, a nice rotation. We called that a bear flag, inside of a 1, 2, 3 pattern, and a push back down. And then we actually had another triple with a reversal candle. We marked that off. Popped back up, chopped around, but continued to move up there. And, that was basically it on that Monday. And then Tuesday here, basically the same thing. We started chopping around. We had a bearish flag here. Looking at some of the signals here. One of the things we noticed is we're holding underneath that 20 period moving average. And when we hold under the 20 here and we start to flag out like this, we don't want to pay attention to that rotation of the fast. If you could really establish a trend day, and you pay attention to that fast, every time that fast stochastic rotates back into an overbought level, that's a short opportunity, short opportunity, short opportunity, short opportunity. In this case, at the end of the day, it kind of embedded. You have to have a little. It eventually broke down when you got a triple here. Again, the triple stochastics. That's what we specialize in, the bigger moves. And then you can see a little bit chop and stuff. And some of it, you don't want to really deal with this kind of chop. You want to wait for multiple indicators. And I'm not even looking at the 5 minutes, so I can't tell you what the thought was at this point. Watching this channel go up, was there a 5 minute setup at this point that broke down? Just a nice, again. Then Wednesday came along. We did the same thing. We actually did take a great trade off of this level. We picked it up. It did flush out here. It was embedded. There was really no signals here. It was just very, very weak. We dropped out. We pushed back up. We held a little bit higher. No really good signals. We just took a shot into the calls here. And we picked up a lot of things on this flush. And the market made that big reversal and climbed all the way up. And midday, we could start to see the strength here. As really were embedded up here. You didn't have many rotations back down. You had one right here on the fast stochastics. You had another one right here for another bounce, and you had another one right here. And then you broke out. Then you had a flag set up here. You can see that fast rotation, the strength here in the medium and the slow stochastic, and you can see that flag identified also. So this is what we're concentrating on. This is what you want to be watching. Even if you're trading the SPY or just trading individual stocks, the overall market is the tide that you're dealing with. And it's important to go with the tide. Again, some other great setups here. Same thing here, the rising wedge pattern, the breakdown, identifying that wedge pattern. Seeing a flag coming out of this area too. And you can see right here when it's pulled down to the 50 period moving, we flagged out and pounced right back up. But then we got overbought real quickly. So it's not about not working. You could say, well, this still rolled over. The truth is it gave you a bounce here, 87 to almost 89, and it got overbought. And that's telling you that's how far that's going to go on that 1 minute chart. All bets are off every time you get crossing over on the 1 minute. Probabilities rise when you have all three of them set up there. But as you can see, the trend was strong here. So fight the trend, buy the pullbacks. So here your pullback is, bigger move. Here your pullback is, bigger move. Instead of concentrating on shorting into strength, except up here where you get into that wedge pattern, things that, you have an opportunity there. But it looks a little extended, so we weren't, too excited about it. And there it broke down, and we kind of continued to break down. And then we had some China devaluating their currency, and then all kinds of crap happened. And then it ends up, this is Friday now, and I'm off the air, and I'm doing this video for you, and just showing you how important it is to just recognize some of the easy setups that are in the playbook plays. The coil stochastic channel breakout, we see that a lot. The flag setup, the triple threat setup, especially on those short-term charts here, and that 5 minute rotation, which we're going to look at right now. You can see that 5 minute, boom, nice move back up, overbought, didn't really move, pulled back, got oversold quickly, not pulled back, so that's bullish. So we pushed back up on this, got overbought. Not a lot of range inside this range. Typically we could actually get a much bigger move off of that 5 minute chart, but we're not getting anything on that. It's just not a day to try to fight this, try to guess where this is going. Slowly dragging down here, slowly pushing higher. There's better days to trade, with the volume as it is. Monday should be exciting. We take a look at the 60-minute time frame and seeing this kind of glide down here. We haven't really turned over and we haven't really spread out like back here. So we haven't seen that, and it seems to be holding up. Is there any news coming out over the weekend that's going to affect this? Again, it's kind of a gamble. But looking at this right now, just the way it's just kind of gliding down here, we could easily recover and push back up. I think we could do that. We're pushing up against that trend line for 1, 2, 3, 4, 5, the sixth time. That's all on the hourly. 5 minute chart, again, not really giving us much. 60-minute not looks more bullish, slightly bullish just because of the flat line there. And the daily here, well, that's all over the place too. So it's a tougher trade here. These, when we get these nice X marks the spot or trend line, 200 period moving average candles. But right now we're inside of a couple big candles, chopping around, Could be a couple more days of chop before we actually break out of this level. From the post that you're going to see accompanying this video, you know that I'm long-term bullish. With everything that the market has thrown at us, and I'm going to go through the list right now. Greek defaulting, China devaluing its currency, Putin hating us in Croatia. That's just just the tip of the iceberg. All the race issues that are happening here in the U.S. This weird presidential election, with Donald Trump leading the GOP candidates. The market has taken all this and look where we are. We're a stone throws away from the highs, all-time highs, 50 points away. 50 points away. That could be taken out in 2 days. Yet the market here just hanging out, Then we had the death cross approaching us, Soon it'll be the Hindenburg and the Daffy Duck signal. Let's see what happens here. The fact is, and I talk about this again in the post, that we're dealing with everything technology-wise. This like the top 5 stocks, and that's the again. Let me go and plug that. That's going to be the focus of this next week's watch list, because I am going to be on a little vacation with my family, but I'm putting out the watch list for next week for the members, and it's going to be focused on the best 5 stocks I see going forward here for next week and further, but really for next week. And these are very great stocks, so we're going to break them down. We're not going to say, we're not trying to pull a rabbit from the hat. I want to show you greatness in charts right now. You hear that dinging in the background? That's greatness happening right now. It's greatness in one of the charts, pushing new highs on the day. We want to be in things that are new highs on the day. The market is doing what it's doing. They're going to rotate out bad stocks. They're going to rotate in new stocks. The top 5 stocks that I'm going to go over are big stocks. This what we call the mega corporations now. And no longer, it's not about, the billion-dollar company, being out there as a fantasy, but it's going to happen sooner than later. And these billion-dollar companies are going to just create new projects and new jobs, and I sound very bullish, and that's okay, because I'm just reading what's on the in the tea leaves there. Market hasn't done it. The Fed has programmed and been so transparent on when it's going to lift rates that everyone's expecting the rate lift from September to December. So that's out there. Everything, all the cards are on the table. All the cards are on the table. So it's not like anything's going to surprise. The only thing I would say has a chance of surprising us is something surprising. I hate to say that, something, a black swan event. Not even go into what it could be. Terrorist, it could be something dirty, whatever. Bomb, natural disaster, political scandal, something, something out of the shakes the core of our government. But right now, that is the long-term objective. And the short-term objective is harder, because let's go to that 60-minute time frame. You do have, what if you got in here and say, I want to get into the markets on the 11th, and whoa, look at this, it moved down to 50 points. That's not good. But then you get out and it moves back up 40 points. This is the short-term levels, and this is where we specialize. Taking a look at the wind in your sail, understanding what's going up and what's going down and why it does. Show me more times that it doesn't work than it does work, and and how to identify it when it's not working. Even when it doesn't work, you have to identify that. All right, say we came back down, but this is again all based off of multiple time frames, not just one. It's not just the hourly. It's not just the hourly. It's the 25th. So what's the 25th on the daily? And we have to, we break that down. Well, that's because we were overbought on the 25th, and we're turning back over. So of course that's my major red flag up there. We're rolling over on the daily. Expect the 60-minute and everything else to get hurt with that. This is the big boy. So the big boy is rolling over. That you have to pay attention to that. 60-minute here. It's probably going to get a little pressure on it. So very easy to just put 2 and 2 together. Understand where you want to get in. Force yourself to get out. All right, I think I did enough talking for this. But again, this week's watch list is going to be based on that. And if you're getting this getting this video, you might not be a member of Day Trading Radio. Definitely check it out. The link is on the video, and the link is on the site. And you can take a look at the research and the chat rooms and the great traders in the room. I always got to give a shout out to those. They were very great trading this week with all that's going on. And let's go back here for a second. See, we actually see we're going sideways here. Like, there was a couple good setups today. There was that divergence here. You can see that divergence, that lane divergence, really clear one. Plus there was, and I actually sent that alert here as a triple threat. Then we had a sell side divergence, pretty clear one here, right here. And we broke down, and then we had this fast rotation here, which gave us that bullish flag, and then we had that move back up, and then we got oversold in a triple here. And we pulled back down, and we got a triple here. So you see that, and then we pushed back up, and this took enough time to get a triple here. You can see it, right? You know, even though this one's embedded up here, it takes time for this one to get going, and it takes time to get that one. By the time all those are lining up, and you have that space above it, you know, we're talking this right in this level here. And yeah, it pushed a little bit higher, but you know what? That gave us that lane divergence, and that was a perfect, again, another nice little drop there. Short-term moves, all based off of this fast stochastic entry and exit system, confirmed by the slow, medium, or slow and medium confirmation, and just actually adding this to it. This is important. Again, you don't even have to worry about this stuff because I have just, you know, added some features on the Twitter here, and it's again, you know, putting out some of these alerts that we see them. Again, first of all, they all go to, you know, I discuss them live on the radio. So if I'm discussing them live, then I'll tweet them out. If I'm not, then we're typing them in the chat room. Here's a nice little pattern here playing out. Let's copy that line here. Keeping this line underneath, which makes this a nice 1, 2, 3 pattern. 1, 2, 3 patterns are very strong when that one of the pivots start at the low of the day, or one of the pivots start at the high of the day. So this is an important pivot. It looks pretty nice. And let's just see one more thing here. I want to see if there's a little wedge. No, it's not really a wedge. I'm not even paying attention to that one. Yeah, 1, 2, 3 pattern. Well, nothing really happening right here, but a good talk for the futures. Good talk for people out there. Again, I'm about to put out another video here discussing the top bets for next week. I typically throw out a nice one out here, and I also want to discuss ExxonMobil and the oil trade for a second. The oil trade has been getting crushed over the last few days, but you're seeing the divergence in some of the oil companies. In this case, you can see Exxon price actually moving up as oil price is going down, and the XOXY here is another one. Continues to push higher off of that trend line. So these are very nice lower trend lines. This is 1, 2, 3, test 4. Either one of these, I like these. Like either one of these. I am in the ExxonMobil, added to it today. It's one of our favorites. And again, like I say, we're seeing the divergence happen here. We actually pushed a little bit lower here the last 2 days, but you can see we started turning back up. We never really turned down. That means the momentum has shifted, and we're fighting our way higher. You know, oil probably is going to get a bounce here within the next week. You know, and what's that going to do to some of these oil-based companies, energy companies like ExxonMobil, you know, even Chevron, the Occidental Petroleum. So this looks really good. Might even want to say that a bear flag, but because I'm seeing that divergence, I'm going against that call. I think we're moving up off of this. I think we get $80 back in this one very fast, and it looks pretty good right now. So we'll be following that next week also. All right, so let me get back to the other video. Hope you enjoyed this video. I think it's an important video just based off of some of that HPS stuff, and some of the indicators that we look at. They continue to play out. I told you I was doing a I had some new alerts here, and I was going to show you some of these alerts, but I'll save that. I'll save that for another time. You can find it on Twitter at Day Trading Radio Twitter. All right. Have a good one. Let me get the other videos out.